Good morning again, everyone. I am Ryan Landy, an Assistant Vice President at SYGNUS Capital. I would like to give everyone a warm welcome this morning to our earnings call presentation for financial year ended June 2024. Just a reminder to everyone joining that you can submit your questions during the presentation, and those questions will be addressed in the Q&A section of the meeting. All the information that is presented here is to be read in conjunction with the audited financial statements as well as the MD&A that can be found on the SYGNUS Group's website. I would like to now welcome Mr. Jason Morris, co-founder, Executive Vice President and Chief Investment Officer at SYGNUS Capital, who would be guiding us through the presentation this morning. Over to you, Mr. Morris.
Hey, Ryan, thanks much. Good morning, everyone. Today is the 1st of October. I think this is the latest that we have ever had an earnings call since we kind of started this process a couple of years back. So the first thing that I would like to do after saying good morning again to everyone, wherever you may be listening from, is that, would really and truly like to apologize profusely for the late release of our audited financial statements, which was due at the end of August, and it got released a month later. I think this has been the latest release of audited financials by CI in its history, which is not a good thing. We don't take shareholders and communicating to shareholders lightly. We tried everything in our power to get this out on time. Unfortunately, we were unable to. In my former life, I used to be a researcher, right? So, I just made a quick look at the JC website, and I recognized that they were on the first page where you have the audited financials being reported. There are actually 23 notices of delayed audited financial statements, including about half a dozen of extended delay, meaning it was delayed first and then it got extended again. I'm not pointing out that data as an excuse, right? I'm just saying if there are almost 24 requests or posting of delayed audited financials, then there seems to be some underlying issue that is affecting, the auditing of financial statements, which I think is a very something to note. So, with that preamble and apology, I hope we are never in a situation again where our audited financial is delayed. At least the good thing is that we still got the financials out within 90 days because we chose to audit our financials within a 60-day period rather than 90 days. So at least, the information is getting to you in good time. And to make up for the fact that our financials were a bit late, we are going to give you some additional information today, right? All right, so with that preamble out of the way, let's jump right into it by getting to the presentation. So the first thing I'd like to say is that SCI is a rated entity by CARICRIS, and our ratings were affirmed by CARICRIS in July, which is JM++ plus on the Jamaican scale with a stable outlook, and CARI++ minus with a stable outlook. So, we have a strong partnership with CARICRIS as a rating agency, and we intend to remain a rated entity forever. Now into the preamble before we actually jump into the financial results in terms of the dashboard. There are 6 points I would like to highlight. The first one is just the earnings power of SYGNUS Credit Investments. Would have generated record. Ryan, can you go to the slide, please? would have generated record earnings per share, record net profit, and record total investment income. And therefore, across all the various ways that you look at a financial statement in terms of earnings power, I think SCI would have done reasonably well during the period. Could have done a little bit better, but notching a new record in earnings per share and the profit and the top line revenue is good. And we'll give you a lot of additional information today on the earnings power of SCI in terms of a go forward basis as well. Second point I'd like to highlight is Puerto Rico and the transformation that has taken place there. Last year, this time, we would have been explaining to shareholders that we are doing a transformation, that the transformation was expected to be concluded. I would have reported that we would have concluded the transformation on July 1 of 2023, right? And obviously, you would need time to show you the results of that transformation. And I'm happy to report, as I'll do later in the presentation, that the base earnings of the Puerto Rico business increased by 5.7 times, delivering, I think, a record $4.2 million US. And I get into that a little bit later. So if you think about that net profit that Puerto Rico business has generated, and recall that the Puerto Rico business is not consolidated in SCI, so that 4.2 million, you're not going to see it in SCI's income statement, right? You're just going to see a fraction of that reported in terms of valuation gain. If you think about that, base earnings of Puerto Rico, then as we would have indicated last year, and maybe earlier than that as well, that we expect that the Puerto Rico business is likely to not only rival SCI, but perhaps become bigger than the SCI business in due course. And it's safe to say we are solidly on that course. Of course, the other part of the Puerto Rico transformation, other than the financial performance, which was phenomenal, right, is the fact that we would have restructured the business, and the business is now optimized in terms of how it originates and deploys capital, the cost structure of the business, and the corporate structure in terms of taxation. So I'll get into that a little bit later. Third item is the origination platform. The financial year would have concluded with SCI's private credit platform, which is the English-speaking Caribbean portion of the platform, plus the Puerto Rico, which is for the time, well, it's Spanish-speaking portion of the platform, but for the time being, that's just Puerto Rico, would have delivered $150 million US in deployment in one single financial year, which is an incredible feat, right? And that incredible feat would have been substantially assisted by the fact that from a funding point of view, SCI would have raised a record $50 million from the Jamaica Stock Exchange in a public offering of preference shares, which was the largest, not just the largest capital raise in SCI's history, it actually was the largest raise. The figure was bigger than the combined raise of all the other capital that was raised on the stock market for all of 2023, which was just phenomenal. And I think the US dollar portion of the capital raise was 40 million, which was also a record. I think that's the largest US dollar capital raise on the public market at the JSE since SCI became a publicly listed company, if memory serves me right, which would have been all the way back to about June 2018. So those are really phenomenal feats by a 7-year-old company. Of course, not to be outdone, if we're raising capital in records amounts from shareholders, we would have returned record dividends to shareholders as well. I think 3.15 million US. And before lest I forget, I think the Puerto Rico platform would have also increased the amount of dry powder it had at its disposal by increasing its, moving to increase its bank credit line that it has with its partner in Puerto Rico. So all around funding and capital returns to shareholders were record years. It was a record year. The fifth thing I'd like to highlight is in terms of risk management is that SCI did not crystallize any losses during the financial year. And the two non-performing investments that we have on the books would have remained at two. And I'll give more highlight on the risk management profile of the portfolio. And the last thing, and they say save the best for last, this would have occurred subsequent to the end of the financial year, on September 18th to be exact. We have been working diligently for 1 year trying to get international financing into SCI. In other words, trying to get capital from outside of the Caribbean to come into the Caribbean to deploy into Caribbean businesses and to affect the lives and livelihood of the Caribbean. And you know, on September 18, we received the very good news from our partner, World Business Capital, where we would have secured a 10 million US long-term loan facility. And this is, we think, is the first of many more that will be coming down the pike. The importance about this facility is that it is backed in terms of a guarantee by the United States Development Finance Corporation, or the DFC. And this would be the first time that the US DFC was providing a guarantee for a loan facility that is targeting businesses in Jamaica. It has never been done before. So SCI basically is, you know, broke new ground with its partner World Business Capital and having a DFC there as a guarantee for the facility. And we speak more about this later on. I think we have perhaps a press release, or there's some kind of release that's gonna go out from the DFC today in a report later today. I'm not sure if it has gone out already. So this is kind of, you know, hot off the press as we're delivering it. And not to be outdone, obviously because we have reported our financials late. Again, we apologize for that. We tried everything in our power. We will have, the board will meet in short order to consider, and if it sees fit, a dividend based on the audited financials that would have been released yesterday. So now with the preamble out the way, I can get into the meat of the matter. In terms of the performance for the year, SCI record net profit 6.03 million, up 17.3% versus last year. Total investment income, also a new milestone, crossing the 10 million threshold for the first time in the history of SCI, coming in at 10.1 million, up 13.6%. Net investment income 5.28 million, up 3.9%. Earnings per share 0.0103 US dollars, or 1.03 US cents, whichever way you prefer, which is a new record. And we spoke about the dividends already, 3.15 million, which is a new record. Now, in terms of what would have contributed to the record net profit, there are two key items that I want to highlight, and I'll drill down a lot into them. We would have obviously generated a lot of total investment income from a much bigger portfolio, given the capital that would have been raised in the period. Accrescent, in particular, would have increased its net profit by 5.4 to 4.18 million, following the first full year of restructuring. And however, in SCI's financials, the only thing that you're gonna see there is 1.3 million reflected in Puerto Rico Credit Fund investment income, which comes as part of total investment income. And that's because, as we have explained on multiple earnings calls before, that the Accrescent is not consolidated up into SCI. It doesn't meet the accounting standards for consolidation. And so we have to use a valuation metric that utilizes market multiples. And if there is unfavorable movement in market multiples, then what will happen is that the movement in book value of Accrescent will be adversely affected. And we would have seen this during the first 6 months of the financial year. During the first quarter, when we reported, we would have had a big loss of, I think, 400,000, well, big in the relative scheme of SCI's profitability. And for the 6-month period, even though we would have recovered some of that somewhat, we would have still reported a loss. But by the end of the financial year, you see where it got up to 1.3 million. And so we're happy for that, which is higher than the figure that we would have reported last year, and I'll delve a lot into this later. However, that 1.3 million is not reflecting the true value that has been created in the Puerto Rico business this year. So I just want to highlight that for context, right? The second thing is that if you look below the line, we would have had a tax credit of 632.6 thousand, and a large part of that would have been driven by the recognition of a deferred tax asset from the Puerto Rico business because of the restructuring that would have been done. And I'll delve a lot more into that on a go-forward basis. I just want to highlight those two things for you. On the next slide, as usual, just want to give you some color. I don't want to go through all the numbers here. You already have the numbers and you can go through them in your own time, right? But obviously, I want to highlight the fact that interest income obviously went up substantially, but you can see where interest expense moved from 5.9 million to 10.3 million, right? And the jump in interest expense, which was substantial, reflected two things. One, obviously would have increased our use of borrowed funds substantially to fund the growth in the balance sheet and deployment of capital. But second thing, obviously we're in a high interest rate environment and the cost of capital would have been quite high. Fortunately, Jamaica, which is one of the primary markets that we raise capital from, started cutting interest rates. They went down by 25 basis points in August. They actually moved before the US Fed. And subsequent to that, of course, we know that the Fed would have moved by cutting rates 50 basis points in September. So that's good in terms of our interest expense. Obviously, our portfolio is structured in a manner where we are solving problems for clients. So as interest rates go down, we expect that we will lock in a bigger differential before the overall asset side of the portfolio yields start to go down. The second thing I'd like to highlight, as I said before, the Puerto Rico Credit Fund Investment Income. On the face of it, you can see that, okay, versus last year, where we reported 372,000 and report 1.3 million now, okay, that's a big jump, right? We're talking about 4 times the reported figure. But this doesn't tell the full story, right? Because the price to book multiples that would have been adverse, would have had adverse movement in those during Q1 and Q2, meant that the figure that you're seeing here, 1.3 million, could have been substantially higher. But, par for the course. What we think will happen on a go-forward basis is that this figure, we will have a catch-up period where we are getting the true underlying value of this on a go-forward basis. Just like we would have reported in Q1 and Q2 when we receive a lot of questions, and even during the AGM, if I recall, a lot of questions about the Puerto Rico Credit Fund Investment Income, and I was explaining that the underlying business was doing phenomenally well. And you'll see this on the next slide. So the business itself is doing phenomenally well. It's just the method by which we're recognizing the revenue is affected by market multiples. So the other thing I want to show here is, okay, impairment allowance last year would have had a large allowance of 844.9, almost 845K, and that would have been driven, of course, by movement in our ECL due to the write-off of MV Cayman. And this year we didn't have any write-offs, so this year our ECL is just going back to the normal run rate, and that's the reason why the impairment allowance is half of what it was last year. And the final point here is the taxation credit that I spoke about, that I'll give you some more color on when I get to the next slide. So the next two slides are brand new in terms of the information that we're going to share. So this earnings call is going to be a little bit longer than perhaps normal because I need you to understand how the business is flowing. So next slide. So here, right, I'm focusing first on the earnings power of the Puerto Rico Credit Fund, which is the line item that we spoke to about the 1,204,593, right? The 1.3 million US that you saw coming on a total investment income. It's important for everyone to understand this. So, effectively, if you look on the leftmost column first, right, starting from the bottom up, so you see Accent Financial LLC, and by the way, the name was changed effective July 1, 2023, from Accent Financial Incorporation or Corporation to Accent Financial LLC. And the reason for the name change is to change the corporate structure to allow the company to become more tax efficient by taking advantage of the tax incentives that exist in Puerto Rico for certain types of investment. So that's the reason why we changed the name. So you can see Accent Financial LLC, right, which is a company that was acquired by SCI in 2022 February. That's owned 100% by SYGNUS Credit Investments Puerto Rico Fund, right? SCIPRF. So we use that company to effectively acquire the shares of Accent. And so Accent is the operating company entity, and SCIPRF is a holding company. And then above that, you have SYGNUS Credit Investment Puerto Rico Incorporated, Inc., SCIPRI, and that owns 95.58% of the whole co, SCIPRF, which then owns Accent, right? So that's the structure that we use to do the acquisition. And so our stake in Accent is effectively 95.58%. So that's the left column. So if you move to the second column, you will see, okay, the net profit of Accent Financial Limited was 4.18 million, right? And that the company that was acquired in February 2022. And you can see that that is 5.7 times greater than the 733.8 thousand that was reported in net profit for the previous financial year. Now, I want to also highlight that the financial year end for Accent was changed, and so to June to align with SCI, and that change took effect at the start of July 1, 2023. So this is the first full year of having financials reported with a year end for June. So what we did was to go back and basically look at, okay, if you do the comparison, what would last year 12 months to June look like, which is what you're seeing at 733K. So if you filter up now to the whole co, which is actually consolidated, right? There are some expenses that, you know, are existing in the whole for SCIPRF. So the 4.18 million gets translated to 3.69 million after you take those expenses into consideration. And there are some, last year there were some one-off revenues that caused the 733K net profit to be 1.47 million, right? But for all intents and purposes, the profit that you see down in Accent Financial LLC is what should consolidate up to the whole co SCIPRF when you normalize out for one-off expenses or revenue. Now, that's where the consolidation stops, because when you get to SCIPRI, there's no consolidation that takes place. What you have in SCIPRI is a valuation of the investment in SCIPRF. Remember, we spent 22.5 million, I think, on acquisition. Then we would have spent another 2 million in earnout, and then we would have increased our stake. Last year, we increased our stake by 3 million. I think we reported in December that we would have invested another 3 million by buying additional shares in Accent by spending another 3 million, right? So all of that money that we invest all the way down in the Accent, we are valuing that. And fundamentally speaking, what should happen is that the book value of Accent is what we are looking at, right? So we are applying some valuation metrics. We are applying a discount. We're applying a control premium for lack of we're applying a control premium, and we're applying marketability, lack of marketability discount, and then a market price to book multiple to the book value of SYGNUS Credit Investments Puerto Rico Fund. So what we do is we take that value at the start of the financial year. So June 2020, you know, what's the figure at the end of June 2023, and then what's the figure at the end of June 2024 in terms of book value, and the difference between the two is what gets reported in SCI PRI. So that 1.3 million is what you see is what flows through to SCI's income statement. And obviously, if the price to book based on what's happening with the market multiples from publicly listed companies that we are using, if the market multiples go up or down, it causes the income that you see in SCI PRI to go up or down, right? So you can see that effectively 4.18 million, quote unquote, got translated into 1.3. And 733.8K got translated in 332K. So I just wanted to give you that context for you to understand. Why is it important to understand this? Well, when the day arrives when Accrescent Financial LLC starts to pay dividends back up to SCI, obviously the amount of dividend that SCI shareholders will be able to receive from Accrescent is not going to be dependent on the 1.3 million that you see in SCI PRI. It's going to be dependent upon the 4.18 million that is made by Accrescent that we own 95.58% of. So that's the reason why I really want to just give you the context, so that yes, you're seeing the 1.3. The 1.3 is 4 times what the 372 that reported last year, but the real earnings power that SCI has at its disposal is at 4.18 million that you're seeing down in Accrescent, right? So if we move to the next slide, again, we're gonna move column by column. So what we are showing here now is, okay, on the previous slide, I showed you kind of the corporate structure of the Puerto Rico business and the different holdcos and the operating entity. So now I'm driving down more into Accrescent Financial LLC, the operating entity, to kind of explain to you, okay, what really happened in terms of the transformation, and what does this mean for the 2024 financial year that we just reported, and what does it mean on a go-forward basis. So effectively, there are 3 main things that happened with the transformation, right? So the first thing that happened was that, well, 2 main things that happened and 3 effects. So the first main thing that happened was that the Accrescent was an internally managed private credit company, meaning the employees were part of the firm. So the firm had actually all the expenses related to operating a business, just like any normal business. And the change that we would have made was to separate the company from the management, right? So similar to how you are used to SCI, where when you look at SCI's balance sheet and income statement, is just a pure financial asset holding company. There are no employees in it, and there are no expenses related to employees. The company just pays a manager a management fee to manage the firm, and so you get a clean balance sheet. We did the same thing for Accrescent. So we extracted the management, and so you now have a clean balance sheet with only assets related to investments. So what that meant in terms of from a total investment income or top line revenue is that there are some income that was being earned by Accrescent that really its fees being earned by the manager of the business. So when we stripped out the manager from the business, effectively Accusent would have lost. And for last year it was 688.8 thousand in revenue, right? So that revenue, total investment income, went away. So as you can see in 2024 financial year, that went to nil because it no longer exists and it will never exist again. It's gone forever. So that's, you know, a negative in terms of revenue that's lost by stripping out the management company. Now, on the expenses side, when we strip out the management company, what would have happened is that, as you can see there by internal management expenses, in the financial year ended June 2023, you see that 3.48 million, and in financial year in June 2024, you see nil. So we would have given up 688,000 in revenue, right? 690,000 in revenue, but we also would have got rid of 3.48 million in internal management expenses. So if you take the net of those two numbers, you realize that Accusent is already ahead of the game, because similar to how the revenue will not ever return, similar to this 3.48 million in management expense will never return. It's a permanent removal, right? It's being replaced permanently. What was it replaced with? So it was replaced with, similar to SCI, management fee, right? So you can see that in financial year June 2024, management fee amounted to 1 million, but for financial year June 2023, there was no management fee. And there was also a corporate services fee, 200.3K, and for the previous year, there was none. So the 3.48 million in internal management expenses were replaced with, similar to how SCI structured, a management fee and a corporate services fee. And these are charged as a percentage of the assets under management. So these will go up and down based on the volume of the assets under management, just like SCI. And that now creates a clean and efficient cost structure. So from an efficient cost structure point of view, we would have replaced 3.48 million in kind of recurring internal management expenses with 1.2 million for 2024 financial year. And this is a full year, right? So it's not as if I'm giving you data that's not fully. It's a full year because it started July 1. And so we would have reduced expenses by 2.28 million. And if the balance sheet remained exactly the same in 2025 financial year, then basically this is the saving that you would have made again in terms of if you had the old structure in place. So this is in other words, this is a permanent reduction in the cost footprint of the business. So I want that to sink in for a minute, right? 2.28 million reduction in cost. All right. So the final thing that would have happened, or the second, so that's the first big change that we made, and it had two effects: one on the revenue and one on the expense. But on a net basis, you know, we saved substantial, would have provided substantial financial benefit to shareholders. All right. So the second thing that we did was a change from a limited from a corporation structure to a limited liability company structure. And the effect of that, you can see, was in June 2023, would have had taxes of 1.17 million, tax charge of 1.17 million. In 2024, the tax charge is nil. And that's because of the Act 60 structure that exists in Puerto Rico. You know, you're making a new investment, then for X number of years, you can take advantage of tax credit. And so basically for 2024, Accusent did not pay any taxes. There were no taxes due, and there won't be any there won't be a lot of taxes due on a go forward basis either. So if you take the net effect of what I've just said, you take the enhanced tax structure, the efficient cost structure, and the revenues that would have been lost, then you see that we have created a 2.76 million positive financial impact in the first full year of restructuring. And this is a permanent structure for Accrescent on a go-forward basis, which means that the profitability that we showed for Accrescent on the previous slide is kind of the new steady state for Accrescent on a go-forward basis. So we felt it important to kind of spend a lot of time driving down into that so that you can understand why we kept saying that, for example, it made sense for us to increase our stake, our shareholding in Accrescent in December when we made that increased investment, and why we will continue to support this business with additional investments as required in the future. So now we can get into our usual reporting, which I won't spend too much time on. So in terms of efficiency and management expense ratios, the efficiency ratio was above the 40% threshold, coming on at 47.7%. Again, almost exclusively this would have been as a result of the first 6 months of the financial year being adversely affected by lower than expected revenues, primarily driven by the adverse price to book multiples that affected Accrescent revenue that we recognize in the financial statement. And even though the NI financial year, we got 1.3 million in recognition, it's way lower than what we were expecting. From a management expense ratio, however, 2.85% threshold, we're at 2.4%, well within the threshold. And I want to pause here for a second to just give you some more insight into the Puerto Rico business. So if you think about the Puerto Rico business in terms of Accrescent's efficiency ratio, right, was 31% for the financial year ended June 2024. You know where it's coming from? It's coming from 59.1% in 2023. So if you think about the transformation that has occurred in the business is way more efficient, because that efficiency ratio of 31% is the new kind of steady state that you can expect on a go-forward basis. Our threshold is really to be below 40%. It did 31% last year in 2024. So you see that the business is way more efficient now. Well, it was way more efficient than SCI in 2024, and it should achieve and maintain a below 40% efficiency ratio. So that's Accrescent, right? If you think about from a management expense ratio point of view, Accrescent in 2023 was 6.1%, which is way above kind of global best practice benchmark that we set for ourselves, right? Because you can see SCI has a 2.85% threshold, and we would have reported 2.4. Well, the management expense ratio for Accrescent was 2.1%. So the business has been completely transformed in terms of efficiency ratio is 31%, which is on par with the US private credit companies, or US BDCs. They are called Business Development Corporation in the US and regulated by the SEC. If you find a business there that's doing 31% efficiency ratio, it's top notch. It's like Ares Capital, Golub Capital, Blackstone Secured Lending. Those guys are in that 30%, and that's where Accrescent was. So that's global best practice. And management expense ratio of 2.1%, again similarly. So that's top notch in terms of efficiency and management expense ratio, which means that when we get to this to the time, which may be sometime over the next couple of quarters, when Accrescent start to send dividends back up to SCI, you can know that we're doing so by not wasting the dollar. Each dollar of revenue that we generate is not being wasted unnecessarily by cost. And the final point here on Accrescent business, that Accrescent itself is generating an ROE of about, 26 or thereabout percent. I don't remember what the calculation is. It's a very high ROE, right? But in terms of return on invested capital that SCI is generating from taking its capital to put into that business, it's double digits, which is higher than the 8.5% that SCI itself is generating on its own operations. So all day, every day, it's a good investment that SCI has made. Onto the balance sheet of SCI, 72.1 million, which is a new record, and this, of course, is after paying out 3.15 million in dividends. So the shareholders' equity continues to increase. Total assets 198.54 million. I know that would have been about 206 million, which was a record during the course of the financial year, but we would have paid down some debt as we restructured the composition of our liability profile by raising preference shares and replacing some of some debt that we had on the balance sheet to get a more flexible balance sheet structure. In terms of balance sheet KPIs, again, everything is within the threshold level. Debt to total assets of 0.33 times versus the 0.5 times target threshold. Asset coverage ratio 2.66 times, versus 1.5 times threshold level. Net debt to equity adjusted for the preferred equity that we have on balance sheet is 0.9 times versus the 1.25 kind of threshold target that we want to reach. And of course, we have a limit of 2 times. And our margin, which is 500 basis points, would have been above that over the course of the financial year. In terms of investment activity, SCI deployed a record 65.28 million during the financial year, despite the fact that we really and truly started deploying January morning 2024, right? Because if you recall, we wanted to do a capital raise in September, and there were some hiccups with the regulator who experienced, I think, a cyber attack, and that delayed our capital raise all the way down to November. I think we finally got the capital raise closed in December. But a fortune normally favors those who have a little bit of patience, would have raised more capital than we would have perhaps anticipated. So we would have deployed out more than 50. So we raised 50 million in December, got access to that capital, I guess at the back end of December, and we would have effectively, during this last 6 months of the year, deployed more than 50 million. So all the capital that we raised, we deployed out all the capital, right, within the 6 month period, within 6 months. So 65.28 is a new record for SCI. Phenomenal capital raising capabilities. So we don't have an origination problem. And to give you some context on the Puerto Rico business, the Puerto Rico business was on fire, right? They originated 89.3 million and deployed 87.2 million, which of course are new records for deployment. So combined, the private credit platform that SCI has across the region deployed a record of 152.5 million, which is simply staggering for a 7-year-old company, right? And the guys in Puerto Rico have been originating lights out. So the key here for us is really to get access to additional dry powder, because we can, if we raise the capital, we can deploy it. There are so many businesses across the region that are seeking flexible debt financing, and we have the capabilities by having a team sitting in 3 different Caribbean countries and deploying capital to almost a dozen different territories, right? So obviously our job is simply to raise additional financing to deploy across the region, because we have the capability and the platform to do so. As you can see, the yield on the portfolio would have gone up with the movement that would have occurred in interest rates. Of course, interest rates have started to come back down, so we expect that this yield is going to start coming back down, but we don't expect that will affect our profitability. If anything, we think that this will enhance our profitability over the first 2 quarters as we start to cycle through and raising new capital at lower rates, while the asset side of the balance sheet takes a little while to run off. The tenor, 1.5 years versus 3 years. As we go forward, we're gonna want to kind of lengthen the tenor, obviously to lock in higher yields. And we don't have a lot of dry powder left, which means obviously that at some stage during the fourth quarter of the calendar year, which is our second quarter of the fiscal year, we'll be looking to raise additional capital, because obviously that's how our business operates. We need to, as the business grows and expands, we obviously need to constantly be raising capital. So you can look out for that. And we obviously will be raising capital both in the Puerto Rico business as well as in the English Caribbean business. Of course, we would have spoken about the fact that we have struck a new partnership with World Business Capital and getting a guarantee by the U.S. Development Finance Corporation, and the fact that the U.S. DFC would have been the first time in its history providing a guarantee for portfolio companies in Jamaica that are seeking financing. And of course, the guarantee is for the facility that SCI is taking from WBC. We expect to get access to that financing once all the documentation is completed. Of course, we continue to have discussions with some of our other multilateral financing partners to get their facility to the stage that we have this first facility. And we are also seeking additional revolving credit facilities. So we hope that we can strike up some additional partnerships as we go through time. We would have also done the largest transaction in the history of SCI in the new investment commitment for 22 million US, which was an acquisition financing, and it was actually a syndication. And we would have spoken at length during the course of the financial year, during different earnings call, that we wanted to start doing syndications, have a syndication business where we underwrite transaction, fund it, and then syndicate it down to our syndicating partners and earn fee income from that. And we would have done this successfully by having one of the largest banks in the region being a syndicate partner on that transaction, as well as some pension funds. And this is something that we intend to do as we grow the private credit platform and move it from strength to strength. And we think that by doing this, we're actually increasing the pie for everybody, right? Because we are not competing with banks. We are actually expanding the pie. In many instances, our capital fills a gap that the bank needs to see before they put their secured tier 1 capital to work. So it's a partnership, and we utilize a partnership approach, and we hope to do many more such transactions. And would have also partnered on perhaps the largest transaction that SCI is a part of, which is a $25 million transaction for Bahamas business, which would have been in the media a lot, and we would have deployed substantial capital into financing the road infrastructure in the Bahamas, where we have very strong partnerships, and you guys might have seen this all over the news and YouTube, etc. So that also is a very noteworthy transaction that would have been a part of, and we continue to really look to serve the Caribbean by putting our flexible capital to drive growth and to have an impact on the lives and livelihoods of the communities around us. In terms of proactive risk management, this year, the dollar value of trans, and this is a new report that we intend to continue showing it. The dollar value, so the key that I want to focus on here is early warning and restructure the defaulted credits. In the early warning, the dollar value of the early warning assets would have been reduced as we got paid out on some of these transactions during the course of the year, from 5.2 to 1.3 million. And then the restructured or defaulted transactions, same two transactions making up the stage 3 assets, and you can see what the balance of those assets are, and the fact that we would have increased our expected credit loss from 539,000 to 797,000 on those two assets. But it's really one asset that's driving the increase, because the other one, hopefully, by the time we report the transaction, we would have gotten repaid. Again, the courts system and how you claim back on companies that go into bankruptcy. It's a very lengthy process, but we are pretty confident that we will get repaid our monies, our investment. And so in short order, hopefully, knock on wood, we should only have one defaulted transaction, which we are moving against to recoup our investment by moving against the assets of that company. In terms of the MV Cayman that was written off, there are no new updates. Nothing new has happened. We're still pursuing all options, but as I've said every single time I've come on this earnings call, I'm not very hopeful, but I'm hopeful, right? If we get something back and we can write back something, I'll be happy. But I will tell you that I'm not holding out a lot of hope. But we'll see where that ends up. Overall, would have increased the size of the portfolio, and so the size of the standard monitoring would have moved from 97 million to 128 million, and this is for amortized cost of assets. Obviously, the assets that are carried at fair value, those are valued and carried to fair value on the balance sheet, so those are not a part of the expected credit loss model. This slide just shows you our balance sheet expected credit loss charge, which is reported as a percentage of the overall private credit portfolio. So as a percentage of the overall 198 million portfolio, and you can see that it remains steady at about 0.9% of the overall portfolio at the end of the financial year. In terms of portfolio allocation, very diversified. I think we are 19 industries now. We have deliberately taken largest exposure to financial sector, and financial sector here is really many of them are actually financial holding companies, and so a lot of the exposure is not really to the financial sector per se, but that's the classification. And the construction exposure is primarily in Puerto Rico. Of course, Puerto Rico has over $50 billion in earmarked capital for reconstruction and rebuilding of that country after more than a decade of being in default. They have come out of default now. I expect Puerto Rico is going to become an investment grade country in terms of formal rating in due course. And so the construction industry there is absolutely booming because they went about a decade and a half without any new construction. And because of the tax laws as well, there in Puerto Rico, people in the construction industry actually trade tax credits, which is something that I think perhaps the Jamaican and other Caribbean governments can think about, right? To help stimulate your construction industry a little bit more. And Accusent is one of the SYGNUS Credit Puerto Rico is one of the pioneers in kind of allowing portfolio companies to utilize tax credit in terms of how we structure transactions and financing for companies, which we have seen a lot of people utilizing that. So again, we are pioneering and innovating as we go along. So we are very happy with the higher levels of concentration in financial and in construction industry. In terms of allocation per region, obviously Puerto Rico is 30% of the portfolio when you combine them, and Jamaica is close second at 25.2, followed by St. Lucia and the Bahamas. And we expect this to remain there or thereabouts as we go through time. Final slide. I'm almost on time. Final slide in terms of strategic update, right? So 4 key items. The first one, I kind of went into a lot of detail on that. So the simple thing here is just to continue to scale the business. How we're gonna do that? We need to just raise additional dry powder and deploy the capital. That's it. I've given you all the juice, the details on how that business has been expanded. And we are working on some additional dry powder facilities. So the key for Puerto Rico, get access to additional dry powder, additional capital. The team has the capability and the expertise and the experience to deploy the capital. And that will filter down through to SCI. And at some point, when we start to talk about dividends coming from Puerto Rico, then SCI shareholders will get the benefit of that. Second thing in terms of strategic growth path, which obviously Puerto Rico is a big part of that, but outside of that, we want to be party to $1 billion in private credit transaction across the region. We are well on our way. Would have gone through 150 million in the first 12 months since announcing that we want to be a part of $1 billion, right? We expect this year to be another good year. Core revenues for SCI, we are targeting getting to 12.5 million. Well, we are well on our way at 10.1 million in 1 year. ROE need to be above 10%. That's in progress. We're at 8.5%. We could have been about 9.5% or close to 10% if we weren't hit by unfavorable market multiples for the Puerto Rico investment. But hey, we are fine with that. We'll get to the 10% within the time frame that would have set. EPS, 20% annual growth. That's in progress. I think we did 18.4% for the just concluded financial year. So we are getting to our targets and schedule. Dividend yield to be above 5%, and the APO price. I think we are about they are about still at 5% thereabouts, and the APO price. I think on a stock price though, probably about closer to 6.5% or thereabout, because stock price is ridiculously cheap. I'm not sure if the market doesn't understand SCI's business model or not. Hopefully this presentation would have given people a lot more understanding of what the business is. The business is only 7 years old. We are transforming the business. Transformation doesn't happen overnight, but as you can see, I hope everyone can see that the business is being transformed on two fronts, on the English Caribbean front as well as on the Spanish Caribbean front, which for the time being, the focus is just on Puerto Rico. We will expand beyond the shores of Puerto Rico once we achieve the objective that we had said last year, which was we want to be the dominant force in Puerto Rico. We're on our way, but we're not quite there yet. We also said that we wanted to raise 100 million in facilities, combined of quasi-debt and credit facilities. We would have raised $50 million in quasi-debt December. We just got approved 10 million World Business Capital facility with a U.S. Development Finance Corporation guarantee. We are looking to do a new capital raise, quasi-equity capital raise, at some point during the quarter that we are in, obviously because we need to raise capital to continue growing the business. We continue discussions with other international financing partners to get new capital in, and this is very important because what we're trying to do is to diversify our funding base by having Caribbean-based financing as well as international financing. Diversify the structure of the financing, because pretty much every financing that we get from international financing partners are variable rates. So as rates go down, obviously we are at peak rates in my view. So as rates go down, we actually get the benefit of lower cost of financing, right? And the third thing is that the international financing facilities are typically longer term, than what local financing are willing to give us. And so that gives a more stable source of funding. And finally, it's very good to bring capital from outside the Caribbean region to bring it, for example, inside of Jamaica, right? So I know that each time we are raising capital, the FSC normally says to us, if you're trying to raise US dollar financing, you know, trying to ensure that we're not taking capital, for example, from Jamaica and sending it elsewhere. But in this instance, we are doing the reverse. We are raising capital from outside and we are bringing it in. So we are adding to the pie. We are building and contributing to the pie, and we want to do a lot more of this. And we really want people to understand that's the philosophy that the manager has at SYGNUS, to raise, to have all boats, you know, in the ocean, you know, making headway. Third item here is, you know, launching of new business, and our impact investing strategy. So during the year and the last day of the financial year, SCI would have sponsored a business impact fund in Puerto Rico by the name of SYGNUS Credit Investment Puerto Rico Impact Fund. So SCI is the sponsor, and by being sponsored, SCI would have committed $2 million US and invested so far $1.5 million, and targeting double-digit return on its investment. And there are a lot of global impact investors that would have partnered to invest in that fund. And give more information on this, you know, in upcoming quarters. The fund would have had a first close at the end of June. What SCI is also doing to expand and grow is we intend to launch a new financing product, which will be dedicated to a particular region of the Caribbean. We are moving through in terms of incorporation of the company and setting up of the financing architecture, and we'll give you more information on that as we move through the course of the financial year. So we are launching new businesses while we expand the current platform. Let me say that and say no more for the time being, which also is another reason why we need to raise more capital, right? And finally, share buyback program. 1 year into the share buyback program, would have bought back 10.4 million ordinary shares, which is equivalent to 1.8% of the float, which to me is a substantial amount of purchase in terms of purchase of the float. We continue to buy back the shares because if investors don't think that the shares are worth what they are worth, we will certainly buy them strategically once we feel that the liquidity is there in terms of the amount of shares that we're trying to buy. We have mainly been buying back J-Dollar shares because that's where, frankly, the arbitrage is. The J-Dollar shares are, for SCI, J-Dollar stock to be trading anywhere close to 13 Jamaican dollars is just ridiculous, right? Because if we look at the book value of the firm and look at the J-Dollar shares and adjust for the FX rate, you're talking about 40% below book value, which is crazy. So we will continue to buy back the shares, and when we make those purchases, this is actually accretive to the investors who hold on to their shares, because we are getting back way more shares per unit of dollar spent, which means that when we pay dividends, the dollar value of the dividend to the existing shareholders is going to be higher, right? The dividends per share that you get is going to be higher. And the earnings that the company makes is going to be higher because we have less number of shares to count against. So again, I hope we have given enough information to investors for them to feel comfortable about the company and the trajectory that the company is on, the partnerships that the company is forging. We have been talking about these international partnerships for a long time, but the due diligence process is very detailed and in depth. we took a year to complete this due diligence process, which involved both set of partners, both the World Business Capital and United States Development Financial Corporation, taking a trip to Jamaica to look under every table and share in the investment manager SYGNUS Capital Limited, and to look at SCI itself as well. So we're happy that that process has concluded, and we're looking forward to hopefully notching another international financial partnership as we look to build this business from strength to strength. Ideally, even though we did $150 million in deals last year, ideally we want both legs of the business, the English Caribbean and Spanish Caribbean, ideally to be doing like 100 million in transaction per year on a steady state basis. It's gonna take us a little while to get there, right? But if the business is doing 200 million each year in terms of deployment, then I can relax a little bit, because I would know that from a scaling of the business, we would have achieved substantial scale. That's kind of one of the objectives that we want to have and to do. And to do that, we need much larger financing facilities. We need much larger revolving credit facilities. I'm still trying to push to get regional financial institutions to give SCI like a 50 million or 75 million revolving credit line. I mean, in Puerto Rico, they have a $60 million revolving credit line, and their business is smaller than ours. But anyway, I digress. We will get to the to that in due course. That's the end of the call. I'll take questions now. Thank you very much.
Yes. Thank you for that detailed presentation, Jason. I'll jump directly into the questions, with the first one being it's regarding MV Cayman. I think you would have already answered this one, but just for everyone here, any recoveries expected from MV Cayman?
So my honest view is that I'm not expecting any, right? But if I get some, I'll be happy, right? And that's the line that I've held for a very long time. If somebody were to come and buy the asset at a value that would allow for us to get back something, then I would be happy. We would obviously write that back straight to the bottom line. That would be income that we'll get back. But for the time being, I'm not seeing any buyers of worth that's coming to the table that would offer a price that would allow for that to happen. So unfortunately, I don't have a very positive outview on that, but I'm still hopeful. Right? I'm not giving up hope.
Yes, thank you for that, Jason. The next question: what actions are required to consolidate a higher percentage of the Accrescent net profit?
There's no action that's required. We can't consolidate it. The accounting standard is the accounting standard. So there's no action. And what I would say to investors is that you don't need to worry too much, right? Because the proof of the pudding is going to be when we start flowing back the dividends up. You get the cash in your hand, right? One, two, maybe I should explain it a little bit more. So one of the reasons why we are adversely being impacted is because we are using a 2-year look back period of price to book multiple and averaging them. So we're taking an average over 2 years, daily average. So basically all of last year we would have had a period where we went into COVID and then we came out of COVID, and when we came out of COVID, the entire market went up aggressively, and so the price to book of everything was way up in the sky. So now that market multiples are normalizing, it means that they are coming down from those lofty multiples. right? And what's been happening with US BDCs, our private credit companies, that we are using as the cohort of benchmarks to take the price to book multiple from, is that the companies are reporting record profits, which means that their book values are going up, skyrocketing, but the price of the stocks weren't going up as fast as the book value was going up, and so the price to book multiples were trailing, right? Now, as we get into this interest rate cutting cycle, what is likely to happen, and what we start to see happening is, okay, the book values of the firm might start to come, because the yield on these companies are like, 9.5%, 10%. So as rates start to get cut, those guys are going to maintain their core dividends, right? People are going to start, I guess, chasing dividend yields, which means that people are going to buy the stock to, which is will reduce the yield that you can get when you buy the stock, because the dividend isn't going to get cut, right? And so the price may go up, and therefore the price to book will actually increase. But we are in a period where we would have rolled off very high price to book multiples, and we are now normalized, because I think the price to book right now is like 1.01. That's where it is now. Last year, June, it was like 1.12. So, on a go forward basis, if the price to book just fluctuate within, like, even say 1 or between say 0.98 and 1.05, the amount of profit that Accrescent is delivering might be enough to offset the adverse movement in the price to book. And so we don't really need to do anything. It will cycle through. It will basically cycle out, and we will start to have basically a larger amount of the underlying profitability cycling through the PRCF as income. So we don't have to do anything to answer the question specifically. There's nothing that we can do. It's just a cycle where we have very, very high price to books. I mean, when we came out of COVID, the price to book was like 1.25 times, right? So you can understand that if we are cycling through that, and we are doing a comparison of last year versus this year. So if last year you had a higher price to book, and this year the price to book is lower, you're gonna get hit. So we don't need to do anything, but I would say that in this financial year, next financial year, we are likely to see a much higher reported income flowing through, because we are now at more normalized price to book levels.
Yes, thank you for that response, Jason. The next question is a two-part question, so I'll ask the first part. What are your thoughts on banks and private credit companies going from competition to collaboration with each other? Reference is being drawn here with the recent article being released, where we see Citigroup and Apollo Global Management joining hands in agreeing to invest $25 billion over the next 5 years. What are your general thoughts on that?
So happy for that question, right? It means that there's an investor there, a shareholder there, who is very keen on what SYGNUS is trying to replicate, because we're not trying to recreate the wheel. So very good point, right? So, and if you look at the international space, banks actually fund private credit companies. Like, banks are the largest financiers of private credit companies. They give them huge revolving credit lines. They actually give them accordion, what you call accordion facilities, which means that as the company grows, the size of the facility automatically get upgraded or increased. 1. 2, they also enter into a lot of joint venture partnerships with them. And that example that was raised is just one of many such partnerships that exist. And the message here for our regional banking partners, and we have regional banking partners, I'm not trying to cuss them out or anything, is that the private credit segment of the financial industry is not a competitor. We're not competing with you, right? We're not trying to, if a client can go to a bank and get a business can go to a bank and get a 8 or 9 or 10% secured loan. We are never gonna try to take that business from a bank. We try to do transactions that banks can't do and our banks should not be doing, right? Because maybe they have depositors' money. We don't have depositors' money. We actually have more flexible capital that can navigate multiple economic environments, and we solve problems, and we basically are very, very fast with the type of financing that we provide. And obviously we increase the pie. There are so many transactions that we have done where banks are part of the transaction, but it is SCI's capital that made the transaction work. If you didn't have SCI's flexible debt or quasi-debt financing as part of the deal, the bank would not have committed their capital, right? So I'm looking forward to more and more partnerships with banks, and for banks to take a page out of what's happening in the US. Too often, our local and regional banks are giving us a story that, you know, they are at their credit limits. But if you give SCI $3 million, man, SCI has a $200 million book. If you have given me $3 million, what kind of limit can you be at? You see what I mean? We have a $200 million book. So a $3 million revolving facility can't be any form of limit, right? Let's break the glass ceilings and, you know, push down the doors. It is better for you as a bank to deploy your capital to me and let me go and find facilities to deploy the capital, where at the back end, after that company has grown from a small business or a medium-sized business, it will now become a business for you to actually onboard or expand your facility with that business, because it's now bigger and faster growing, and the corporate structure of the business would be more refined because of our capital that did that. But you would have been the party that financed our capital to allow us to do that. And so as a bank, you can grow your pie much bigger and faster by deploying some of the capital through us and through our platform, rather than you trying to go out and do it yourself. Because the expertise that we have is a specialized expertise, and the things that we do is specialized, right? So I'm not pleading or anything, right? I'm just saying it's incredible that in Puerto Rico, which is a developed market, they have 7 times the revolving credit facility that SCI has. It's amazing, and our balance sheet is double theirs. But that with all that said, we're working on getting certain banking partnerships in place. If we can't get it in the Caribbean, we will simply get it from the US market, right? Ultimately, you know, this business is existing and it's here operating, it's to be doing well. And if we can't get banking partnerships locally, we will get it from overseas, and bring capital from overseas into our local markets. If that's what we have to do, that's what we'll do. But I'm looking forward to a lot more banking partnership, and I know that Puerto Rico business has a huge banking relationship and partnership, and I hope that we can partner with a large financial institution who don't need to try and solve the things that we are solving. Just partner with us, and yeah, let's help the Caribbean to grow and expand, and help businesses to grow and expand. So thanks for that question.
Yes, Jason. Part 2 of that question would have been, do you see SCI partnering with any large banks or large private credit companies? But I think you would have inadvertently answered that as well.
Yes. We're looking forward, and as I said before, if it's not in the region, is gonna be in the US, right? Ultimately, we're not gonna be knocking on the doors and the door remain closed all day. We're gonna find a way, right? Just like how we found a way to create a niche business that when it was an idea on paper, people probably thought that it would not have been successful, but here we are today.
Yes. All right. The next question. So in 2024, advertising expenses increased more than 100% over 2023. Are we expecting a decrease in 2025?
Good observation and good question. We took some strategic decision in 2024. There are certain things that we wanted to do in terms of branding. We would have, done a lot on the branding front, which would have seen those costs increase, as well as, generally speaking, the cost to host events like AGM, etc., would have skyrocketed because of inflation, right? For this year, we are looking to keep those costs under control and have a reduction in those marketing expenses. So the answer to the question, we are looking to have that not increase, have zero or negative number in terms of the marketing spend. But we had to do some strategic expenditure during 2024. But thanks for that question, yes.
Okay, great. Next question. Can you provide any insight into the current pipeline value for SCI?
Good question. I mean, look, man, I think on a constant basis, we have maybe like 100 million plus in pipeline. I mean, in Bahamas alone and Jamaica, Bahamas and Jamaica, those two countries, we can find 100 million in pipeline each, right? Obviously, we're not gonna go out and push to originate pipeline when we don't have money, right? Puerto Rico, its pipeline is bigger than SCI's pipeline. So I would say if you take Puerto Rico, Jamaica, Bahamas, that's like 100 mil in each of those markets, right? The question is for us to get the capital to move the mandated transactions that we have to committee to then move transactions that are not mandated to committee to then funding, right? But origination, we don't have an origination problem. We have so many partnerships, and half of our transactions, are from repeat clients, meaning people who did business with us before recommending or referring somebody else, or bringing a different part of their business to us for financing. So we have a lot of that. That's happening. But obviously, we also have some new relationships that we get in new markets. But we don't have an origination problem. These are coming to us. Transactions are coming to us. At the moment, what we are hunkering down now is we need to do a capital raise to crystallize those pipeline opportunities into cash.
Yes, thank you for that, Jason. Changing the tone out a bit. When will SCI start to see dividends or a special dividend being declared from Accrescent?
Good question. I given a hint to that earlier. So I'm keeping that close to my chest for the time being, but it should be in a few quarters or less, in less than a few quarters, right? It should be shown, man. It should be shown enough, right? Year one was to transform the business and get it on a steady state. I would say that we are there or thereabouts now. So the next step now is to, okay, let's grow this business aggressively, and at the same time start figuring out strategizing, which we have started already. So internally, we have started strategizing already in terms of when should cash start to flow back up. We haven't finalized on that as yet, but you know me already, right? As soon as we finalize, I'm gonna tell you. I don't like keeping secrets, so I'll tell you on an earnings call soon, very soon.
Yes, thank you, Jason. Next question. Can you provide any insight or update as to where we are in the process in terms of diversifying SCI's income stream?
Okay, so we would have started that process by doing our first set of syndication. Our fee income would have been impacted last year by one particular transaction that the fees were earned but weren't earned. Let me put it like that. So we made some special concessions on those fees. But on a go-forward basis, we expect those fee income to be sustainable. That's one. Two, I would have spoken already about a new financing product that will bring in fee income, but more importantly, well, it should bring in a lot of fee income as well as just raw revenue. We expect the launch of that to take place, I would say, during Q3, meaning Q3 fiscal, which is in the March quarter, is when we would expect that business to be fully operational. And with the combination of those two things, we should see the supplemental income coming in. For the time being, the fee revenue is going to be lumpy, right? Because it will depend upon, like, when we do a syndication and book those fee income. The other thing is that fee income based on accounting standards has to be amortized, right? So even in quarters when we book large fees, we have to amortize it over the life of the transaction. So we book it and get the cash, but it won't show up as a big number in one quarter. So it might take a while for you to see some of these items, like over the course of a 12-month period or so. So that's another what I would call, I don't want to call it complexity, another issue, which means that the volume of fee income from an SCI perspective has to be substantial for you to start seeing it peak through. And the Puerto Rico business, though, they don't have those challenges. So on our end, we should see as our fees should steadily increase over time, but we should see periods where we get large lump sum that come in, but those lump sums are going to be maybe I would say a quarter of what would otherwise be reported if we didn't have to amortize them over the life of the facility.
Yes. Yes, thanks for that response, Jason. The next question, does, as a part of its financing, does SCI in Jamaica or Puerto Rico securitize or sell any part of its portfolio or associated cash flows?
So currently, we don't explicitly, but as I said before, we are working on a number of different international financing facilities as well as regional ones. And I'm highlighting that because for us to do that, right, we need certain scale on the platform. We need the platform need to have scale. So we have been pushing very hard, and I've been saying this for quite a number of quarters now, that we want the platform to have a substantial larger scale so that we can do on a consistent basis securitization, etc. Currently, we don't, simply because we don't. The portfolio that we have, the scale of it isn't substantial enough for us to consistently do that. When we have, if SCI tomorrow morning got like a 50-75 million revolving facility, all day, every day we'll be doing that, right? Because we have a facility where the cost of the financing would be tied one-to-one to when we are utilizing the facility. As it stands right now, most of our financing is permanent. So if I go and syndicate down a part of my book and I have the cash, right, I'm still paying the finance cost for that. But I have the cash, and then I have to deploy the cash over X number of months, right? So while I have that cash, I'm gonna have negative carry on the cash. I would have booked the income and the facility that I would have syndicated, that I would have securitized, but then I'm upside down on my financing. And that's the reason why I'm saying we are pushing hard to try and get revolving facilities in place, because once I have wholesale financing, then that's when I can securitize and just keep rinsing keep repeating that process, because once I sell the asset out of the balance sheet, then the financing for the facility also goes away, because I just pay out back the financing. And then I can call on the financing again when I need to deploy into new asset. I can't do that effectively without a huge negative carry on my interest expense if I don't have large revolving facilities. And this again is why we are pushing to try and get those in place. And once we can get those in place, then obviously the scale of the platform increases. So we are well aware of that strategy. We are planning for it, but we have to get the facilities in place that will allow us to do this. But excellent question from whoever asked that question. Excellent question.
Yes, thank you for that, Jason. All right, we'll take 3 more questions before cutting off for today. So the next question is, with a single transaction of 20 million plus, what strategy is employed to mitigate against any significant losses if this investment does not perform?
So very good question. So I can provide additional clarity. So that $22 million transaction, we don't hold a $22 million transaction in our book, right? It's a syndicated transaction, which is part of our strategy to underwrite large deals and have syndication partners who are coming in on the deal. But these syndication partners, primarily they're gonna be banks and pension funds. Their approval process is normally very long, right? I think in the case of the bank, they took 2 months before they actually got through all of their approval. one of the things about SYGNUS Credit Investments, and more broadly, the SYGNUS Alternative Investment Management platform, is that we offer something very unique to portfolio companies. We offer speed. We are extremely fast. That transaction was financed in record time. Remember, it's an acquisition, right? And it was financed in absolute record time. The transaction could not have been financed. Nobody else could have financed that transaction other than SCI. Nobody else in the market could have funded it. It would have failed. So I'm saying, right, that's what we do. So our syndication, so we know before we underwrite a transaction that, hey, ABC is gonna take $10 million of a deal and XYZ is gonna take $5 million of a deal. So we are gonna be left with the remainder. So we know how much we want to invest, but while those people are going through the approval process, we are earning the income on it, right? And we obviously get a fee for underwriting the transaction and the entire size of the transaction. So in terms of how we protect ourselves against things going bad, I mean, first of all, we do proper due diligence and put the right assets on the book. And our track record in terms of defaults is pristine. I mean, we have had 3 defaulted investments, and one of them has been crystallized in terms of loss, right? In 7 years, that includes 2.5 years lost to COVID. So the way how we protect ourselves is simply put the right transaction on the book, but also we syndicate. We have syndicating partners, and we have co-investors who we only do those last transactions when we have co-investors who are coming on board. So it's to our benefit and advantage when those persons actually aren't able to fund at closing. And we have very strong relationships where, so that's how we mitigate by syndicating down. We're not holding 20 million on our books. We don't want 20 million of anything on our book.
Yes, thank you for that, Jason. The next question, can you offer any guidance on ROE going forward with some bigger and more conservative FIs outperforming in this metric by as much as 2.4x?
Ask the question again. Provide more color on ROE by what?
Provide more guidance in terms of return on equity going forward. I think the question here is trying to say that our approach is conservative and that other financial institutions would have outperformed this by some 2.4 times.
Oh, well, I'm not sure which financial institutions outperforming and ROE is being referenced, because SCI is a private credit company, and I don't know of any other private credit company. Well, SCI is a pure private credit company. I don't know of any other pure private credit company in the Caribbean, right? That is publicly listed. That's one. So our ROE is 8.5% currently, and we said that we expect to get above 10%. And the reason why we have 10%, that is like the benchmark threshold. If you look in the US and the ROE that private credit companies generate, which is a global benchmark, you're talking anywhere between 8.5% and like 13%. And the guys who are, let's say, 13, 14%, they are actually venture debt that they do. So what they are financing venture debt, right? Which means that they are expected to generate a higher rate of return, because the primary means by which they are able to outperform the ROE metric is that they invest in convertible preferred shares, for example, primarily, and then they list those companies on the market, and that's how when they exit, they get that juice. Now, SCI does have a couple of these transactions on our books, right? We have quite a number of investments that we have convertible debt in, and some of them that are in the process of preparing for IPOs. and obviously we will get our juice when that comes. But my 10% minimum threshold ROE is really speaking about steady state. You can put your pot on fire, take it off, and know that we're generating at least 10% ROE. That's what that is. But over the next, say, 1-2 years, we might do substantially above that from two channels. One, from the contribution that Puerto Rico will make to SCI's bottom line. Two, the contribution that the new business that I'm speaking about will generate. Because that new business, well, let me not speak too much about that, right? That new business will generate high double-digit ROE. And three, obviously, from SCI's own operation, as it becomes way more efficient and grow in scale, we'll be able to generate higher ROE the bigger the business is, because there are many buttons that we can press that we can't press right now because we're not large enough, right? And of course, securitization was mentioned. There are a number of subcategories that we want, space that we want to play in, but we can't play it because we simply don't have enough flexible capital at our disposal, right? So that's how we're looking at the business. But yeah, I mean, if you look at the banks, if you want to compare SCI to all the banks, I mean, the banks aren't making ROE above 10%. I don't think any Jamaican banks making ROE above 10%. What's making the ROE is the capital markets business and their insurance business as part of the conglomerate. But the bank, pure bank that lend out money, not making 10% ROE, right? I mean, the trading desk that trades FX and all of those, and trade GOJ paper, etc. Yeah, those will give you high ROE, yes, but we're not in the paper trading business, right? We are deploying capital directly into businesses and to entrepreneurs and firms, entrepreneurial firms, to affect the lives and livelihoods of the communities around us. That's what SCI does. And this same business model that operates in the US, the ROE is 10 to 13%. So that's what our minimum threshold target is. And we are a business that we expect to generate substantial capital appreciation and your share price. We haven't seen that over the last couple of years. Of course, we were in a very high interest rate environment, but we are saying that for SCI, the business is being transformed. You're seeing the transformation in front of your eyes. So word to the wise, you know. Yeah, that's all I can say, that we are going for double-digit ROE, and we hope to get there through multiple channels. But I don't know of any other private credit firm that is outperforming us on an ROE basis.
Yes. All right. Jason, I think we have time for one more question before we wrap up. The final question is, what is the average time horizon that we currently have for exits, and how is this impacting our ability to fund?
Exits. Well, I mean, the average tenor on the portfolio is 1.5 years. So that means on average, we invest our money and get back the capital, and then we take it and reinvest again. It doesn't really affect our ability to deploy capital, outside of the fact that, okay, when I get back the cash, I get back liquidity, I can go and fund a new transaction. But the way how I look at the business is, I want my balance sheet to constantly be growing. So when I get back the cash, I need to deploy back the cash almost the same day, right? Kind of thing. Because if I don't do that, then I lose interest income. So I'm not really, so in other words, I don't really look at getting back capital from investments as a source of funds, although it is a source of funds, obviously, right? But I don't look at it that way, because I'm looking at my income statement and looking at net interest income. And if I don't redeploy, so whether I get back the capital or it remains on my balance sheet is neither here nor there to me from the perspective of I want to be generating that net interest income. Because if I get it back and don't deploy it, then my net interest income falls because I would have interest expense but not interest income, right? So yeah, in the grand scheme of things, there's no real effect. What we want to do is to raise additional capital to grow and expand the business, and that's what we are, aggressively pushing to do.
Yes, thank you for that, Jason. All right, we'll now like to wrap up. I would like to thank all attendees for spending the time to attend our earnings call presentation, and a special thanks to Mr. Morris for his astute guidance through the earnings call presentation deck. As a general reminder, all questions that we were not able to respond to on the earnings call will provide a response via email, and also that the recording of the earnings call as well as the presentation deck will be available on the SYGNUS Group's website and also available on our YouTube page. So thanks again, everyone, for attending, and thanks again, Mr. Morris.
And you can say, Jason, Mr. Morris business sound,
No problem, Jason.
Yeah, that's more like it.